Hey, what's up guys? Omar here, broker and CEO of Alden Mortgage and Ome Realty. So we're gonna do another mortgage rate update. Mortgage rates did increase a little bit, and then we're gonna look at historical refi applications, purchase applications since 2012 until now, and then the question that every single person asks, hey, Omar, when is gonna be the right time to buy? When should I go back into the market? When should I just purchase a home? When should I do anything when it comes to real estate? Now, I'm going to go ahead and give you that answer. It's definitely not going to be to my benefit, but at least you'll have an honest grasp of exactly what is going in the world of real estate and what will be beneficial to you financially as time goes on, and what is going to happen here that's going to go ahead and clarify exactly and back up the decisions that we are making over here. Now, the mortgage rates here as of 7/20/2022, we are going to be pricing out 10 different mortgage products. We're going to have a 30-year fix will be sitting at 4.84%. 15-year fix will be sitting at 3.77%. 30-year jumbo will be sitting at 5.25%. Debt service covered ratio, which is also known as a DSCR loan. A DSCR loan is just a loan program that just goes ahead and calculates the total rental income coming in rather than your W-2s or your income that you have, and that is going to be the qualifying factor for the debt that you're acquiring, which is going to be your mortgage, principal, interest, taxes, insurance. So whenever we're using a DSCR loan, we're not looking at exactly how much money you're making or anything like that. We're looking at how much the property itself is producing. Now, the debt service covered ratio, the ratio on this loan is typically you want to stay between 1.15 to 1.25 and or above. That just means, so like to give you an example, a 1-to-1 ratio would be if your principal, interest, tax, insurance is $2,000 and the rental coming in is $2,000, then now you have a 1-to-1 ratio. Bank statement loan, where we just look at your bank statements, no W-2s, no pay stubs, no anything. We just look at your bank statements to see what the qualifying income is. That is going to be sitting at 7.63%. FHA 30-year will be sitting at 4.16%. 7.6 adjustable rate mortgage. Now, this is going to go for every single adjustable rate mortgage. The first number that you see is going to be the time frame. It's going to be the amount of years that is going to stay interest only. Then after that, it's going to go ahead and conclude to a principal and interest. Then that's going to be adjusted every single 6 months on this program according to the market and the cap on your product. Now, this goes the same as, like, for instance, if you had a 5-1 or a 10-1 or a 7-1 or a 10-6. The first number is going to be the year, and then the next one is going to be the amount that is going to go ahead and get adjusted. If you have a 10-1, then it's going to stay fixed interest only for 10 years. Then it's going to get adjusted every single year after that. That'll be sitting at 4.85%. USDA 30-year fix, which is one of those zero down payment programs, will be sitting at 4.20%. VA 30-year fix, which is another one of those zero down payment programs, which is only for veterans that have served, that is going to be sitting at 4.74%. And then hard money fix and flips will be sitting at 9.20%. Now, the mortgage rates, okay? Now, I'm going to go ahead and tell you exactly what I tell every single one of my clients, because it doesn't matter where I go, if I'm like at a dinner or a party, or even if one of my buddies, I run into him at, like, let's say a UFC fight or something like that. Like, hey, is the market gonna crash? When should I buy? What should I do? Okay, so what we're gonna do is right now we're looking at from right now until we haven't filled in our gap for 2023 yet, because obviously we're not in 2023. Now, if you look, mortgage rates have skyrocketed to the all-time high, the highest we've had in the past 15 years. The refi applications right now has been the lowest refi applications that we have ever seen historically for the past 22 years. Purchase applications are steadily dropping. It's as low as it was back in 2015. Now, you'll see that there was a big dip in 2020. I don't need to really explain to the majority of people why there was that big of a dip in purchase applications in the 2020. And for those of you who don't know, we had this crazy thing that was called the coronavirus, and that kind of halt everything, and then boom, it just skyrocketed again. But we are steadily declining now, where purchase contracts are somewhere relative in the 2015 range, which is going to steadily go down again. Now, the reason why I'm going to go ahead and give my answers based off of exactly, when you should buy, when you should go ahead and start purchasing, when should you be back on the market, is based off of this and what I know that's going to happen when it comes to the interest rates. Now, when it comes to interest rates are going to increase. The 27th of July, we're going to have another rate increase. Then the feds are going to kind of see where it's at. Then we're going to have another increase. Now, interest rates will go somewhere into the 7% range. Now, when they go into the 7% range, that means that buying power overall, because it increases your debt to income, is going to decrease, which means that this house that I have right here in front of me, for example, is not going to have the same buying power as it did at 2.5%, 3%. It's just not going to have that. So in order for us to know, so the real estate market as a whole has like this little lax to it, right? So the first thing that always gets hit is going to be, you know, so especially when it comes to inflation, the first thing that's going to get hit is your substances, your everyday items, your gases, your groceries, your cost of goods as a whole will go ahead and increase. As everybody has noticed, everything has just gotten so stupidly expensive. It's nuts. Then number two is going to be the stock market. The stock market is going to go ahead and take a hit. As you guys could see, you could go ahead and look on any single platform that you want, on any single stock exchange out there, and everything is on a steady decline for the most part. 2-3 months out, we've been declining. We're still pretty high, but we are consistently declining. Then once that hits, then comes the real estate market. The real estate market, well, then jobs, if real estate does tank down, job markets do kind of dwindle down. Tech companies have been doing hiring freezes. They're rescinding contracts for employees that they went ahead and hired, but now they're like, you know, we can't even do that, so we're just going to go ahead and hold off. So as a whole, we're looking at this as a big picture, right? Everything is a big picture. The real estate market is going to go ahead, and it takes about 12 to 18 months from the moment of the very, very first correction. So the very first correction was 2022. That was at the beginning of this year. We had a dip at the end of 2021, but like between 2021, at the end of 2021 to the beginning of 2022, we had this big dip. Now, when we have the slow season that's coming up, that's going to be your October, November, December, January, that's when majority of people do not buy homes. Mainly because the expense of having the Thanksgivings, buying presents for Christmas, all the expenses that come along with that time frame kind of puts people on the back burner of actually trying to buy. The hot season for buying homes is usually typically summer because the kids are out of school. You have a lot more free time. You don't have to worry about any major holidays coming up, just 4th of July. And now we are actually in July 20th, 2022. We're going to have our next rate hike coming up here. So that means that we're going to have another rate hike coming up after this into the slow season. So the best time that is going to actually be to buy, to kind of see where it's going to be, is going to be probably somewhere in the neck of the woods of somewhere after February, March of next year. That's actually going to be the ideal situation to know exactly where we stand as far as how far home prices will be going down. Now, everybody knows home prices are declining and everybody is reducing prices because the buying power just isn't there. But if you would like to go ahead and purchase your next home for up to 50% commission rebate, 0% listing on selling your current home, or any mortgaging system, especially any of the products that I just mentioned, link in the description below. And if you like the content or stay up to date on the mortgage rates or anything when it comes to housing, go ahead and like, subscribe, comment, hit that little bell notification. Until next video, guys, I really appreciate you watching. Peace.